In this video, VALIDEA'S Jack Forehand walks through our new ETF factor report. Using this report, investors can look at hundreds of US equity ETFs to see what factors and exposures funds have and what you're paying to get those exposures. We hope you enjoy the video.
The goal with this thing is to answer two questions. Is when you buy any US equity ETF, what are you getting and what are you paying for it? And that's the goal of this, is to try to answer those two questions. Often when you see ETFs analyzed, you mostly see performance used, and you see things like 3-year performance and 5-year performance. And if you look at the long-term data, it'll tell you that those things tell you almost nothing about how an ETF performs going forward. So instead of taking that approach, we've decided to take an approach of, let's get under the hood and look at all the holdings of this ETF and find out what I'm actually getting when I buy this ETF. And what we've tried to do, I wrote a blog post a long time ago where we looked at analyzing value ETFs and going through a step-by-step process. And what we've tried to do is take that process and put it into a page here, so any ticker can be typed in of any US equity ETF, and you can go through and see what you're actually getting when you buy that ETF. So some of the stuff in the report is fairly straightforward and simple, things like assets and expense ratio and the number of holdings in the ETF, things like that. But we've tried to also put some unique stuff in here that is not available on many free ETF sites. And so, for example, one would be active share. You can see active share over there, active share versus the S&P 500 or active share versus the Russell 2000. And what active share is telling you is how different is this portfolio from whatever I'm comparing it to. So in the case of the S&P 500, this ETF is 98% different than the S&P 500. So what that tells me is there are very few holdings in common with the S&P 500. And if there are any holdings in common, they're probably weighted differently. But when I buy this, I'm getting something very, very different than the S&P 500. And when we get down to the factors below, we can talk about what that actually is that I'm getting. But this just tells me I'm getting something different. It doesn't tell me I'm getting something good. It doesn't tell me I'm getting something bad. It tells me I'm getting something different. And what something different gives you is an opportunity for outperformance. It also gives you an opportunity for underperformance. But if you're trying to buy an ETF to outperform a certain index and it has an active share down near zero, your odds of outperforming that index are very, very low, because I'm not getting anything that's different than the index. And in this case, we're getting something with this QVAL, with the quantitative value ETF. I'm getting something that's very different than the index. And in a minute, we'll talk about what that actually is. And then just to go through the rest of the report here, fee for active share effectively tells you what you're paying for that difference. So if I have something that's very different than the index, my fee for active share is going to be very close to my expense ratio. If I have something that's very similar to the index, then my fee for active share is going to be much higher than the expense ratio, because I'm paying more for that active portion of the portfolio. I'm paying more for the part that's different. And we have the same thing here with respect to the exposure. So in this case, this is a value ETF. And so we're judging relative to the value exposure you're getting, how much am I paying? And in this case, it's very similar to the expense ratio, again, because as we'll get into in the report below, there is a lot of value exposure in this ETF. And so I'm not paying much of a difference relative to my expense ratio for that value exposure, because there's a lot of it. So moving on to the next thing, the PE ratio. So what we tried to do here is we looked at every metric we analyzed, and we'll get into those in the factor report below, but we looked at every valuation, quality, momentum, low volatility, every individual metric we analyzed for each ETF, and we tell you which one does it score the highest based on. So in this case, this is a value ETF, so it might make sense that it scores very highly on the PE ratio. When we rank this ETF against all other ETFs, it ranks the highest using the PE ratio than it does using any other metric we have in our system. Moving to the next side, on the side here, obviously the issuer is pretty straightforward. That's Alpha Architect. The category is, what we've done here is we've looked at every factor we analyze. And we analyze with these report, we analyze value, momentum, quality, low volatility. And we've looked at each one of those factors, and we've categorized each ETF based on what it has the highest exposure to. So if it has really, really inexpensive stocks, then it's a value ETF. If it has a lot of momentum in it, it's a momentum ETF. And what we've also done is some ETFs have one exposure that's a lot higher than all the others. And so in this case, this is one where value is much higher than all the other exposures. So we call this a value ETF. In the case of other ETFs, their goal is not to have exposure to one factor, but the goal is to have exposure to a lot of the different factors. And so what we do there is we'll classify those ETFs as multi-factor ETFs. If an ETF has very consistently high exposures across all the factors, where one of them is not higher than the other, we'll classify that as a multi-factor ETF. But in this case, this is classified as a mid-cap value ETF. It primarily owns mid-cap stocks, although it has some large-cap stocks as well, and it primarily owns value stocks. Moving down the report, a lot of the other stuff is fairly straightforward. We look at the median market cap of the holdings within the fund as well as the average market cap. Those are the two ways in which we classify whether it's a small, mid, or large cap fund. And then we look at implied liquidity. And what implied liquidity is often ETFs are judged by their daily trading volume. And that can be one factor to look at, but it's what really determines the liquidity of an ETF is the liquidity of the underlying holdings inside the ETF. And what implied liquidity looks at is how much of that ETF could I buy today where my order would not exceed 25% of the daily volume of any of the individual securities in the ETF. So you look at the least liquid security in the ETF and you say, I don't want to buy more than 25% of that daily volume of that least liquid security. How much of that can I buy of the overall ETF without exceeding that limit? And that's what the implied liquidity is. And so in this case, this is a very liquid ETF. It's $200 and something million you could buy without exceeding 25% of the daily volume of the smallest stock. And then the last value in the table is the concentration, which just tells you how concentrated is this ETF relative to other ETFs. And the highest score is 100 out of 100, and the lowest score is 1. And so you can see this ETF only has 41 stocks in it, so you'd expect it to be fairly concentrated. And in this case, it is. It has 94 out of 100 on there. And we're using two factors in that. We're using the number of holdings, but we're also using the percentage of holdings that are in the top 10, the top 20, the top 50. So we're trying to determine how many stocks does it have, but also how concentrated is it in its largest positions. And those two things are combined together to create this concentration score. So that does it for the top table. Moving to the bottom, we have the factor profile of the ETF, which is the main part of this report. And this just tells me when I buy this, if I look at the holdings of the ETF, what am I getting from a factor perspective? And so we go through all the major factors, and we also go through all the different metrics underneath each factor that we use to create the overall score, and we tell you what is the exposure of this ETF. So in this case, the first thing is size. And size, if you look at academic research, and it's come a little bit into question recently, but academic research over the long term would say that smaller stocks may tend to outperform larger stocks. And so the smaller the stocks are in your portfolio, the more you have exposure to size. And so if a fund was 99 on size, that means it has very small cap stocks in its portfolio. If it was a 1, it would be something that has large cap stocks, and then it obviously varies across the back and forth across the middle. And in this case, it's 67. So this is a little bit above average in terms of having smaller stocks, but it doesn't have very small cap stocks. Moving to value, which is what this fund is classified as, you can see why our system has classified this fund as value. Almost all the value exposures are 98, 96, 98. What's interesting about this fund, and one of the ways you can use this report is, we know, because we know the guys at Alpha Architect that have created this ETF, they're not big believers in the price to book ratio. And you can actually see that in the factor profile of this fund. They have high exposure to every value factor except for the price to book ratio. And so their belief that the price to book may not be the best value factor is actually reflected in the holdings within their fund, because their fund is cheap, among the cheapest ETFs in our database on every single factor except the price to book. Moving forward to quality, this actually is a very high or relatively high quality fund. And that is a little bit unique in terms of value strategies, because some value investors believe you should just buy the cheapest stocks and you shouldn't worry about the quality you're getting. Others who follow more of a Warren Buffett approach will try to buy value and have high quality at the same time. And these guys are following more of that approach. You can see they have a significant amount of quality in their holdings. And we evaluate quality in a bunch of different ways. We use return on equity and return on capital. We use margins, and we use the consistency of earnings and sales. We try to do it in a very diversified way. And so this fund actually scores, despite having very cheap stocks, scores also above average on a quality metric. The next one is negative quality. And in this case, we're trying to screen out things that are bad from a quality perspective. So companies that have high debt, companies whose EPS are projected to decline in the future, companies whose cash flow are not keeping up with earnings, companies who have very negative momentum. We're trying to screen out those types of negative quality companies. So this is the one thing in the table that if the score is high, it indicates you have high negative quality in your portfolio. So this is the one time where the bar being over to the right is actually a bad thing. And so in this case, it has relatively high negative quality, but high on some factors and not high on others. And this is what you see with most value funds. Most value funds, in order to buy really cheap stocks, you have to sacrifice to some degree on some of these negative quality things, because stocks that are doing great and growing earnings consistently typically are not cheap. And then the second to last one is momentum. And we're looking here at just what is the price performance of the holdings within the fund, and also what is the fundamental momentum, which tells you the trend in the fundamentals of the holdings within the fund. And so our total momentum brings both of those together. But in this case, the price momentum, given that value stocks have done poorly, this is probably not surprising, but the price momentum of the stocks within this fund is very low, which is also very common among, at least right now, when value is struggling, is common among value funds. But the fundamental momentum is much higher, which means the fundamentals of these companies have been doing much better than the prices of these companies. So that's typically a good sign when the fundamentals are doing better than the price is. And so this has a combined momentum score of 17, but it has much more fundamental momentum than it does price momentum. And then the last one is low volatility. And academic research has shown that low volatility stocks tend to, at the very least, have the same performance as the market itself, but to do it with less risk. And that's what this factor is looking at. So the more this slides to the right, the lower the volatility in the portfolio. The more it slides to the left, the higher the volatility in the portfolio. In the case of a value fund, again, you'd expect this probably to be below average, because one of the reasons value outperforms is because value stocks are riskier. And so value stocks tend to have higher volatility. And you see that here. You see this has above average volatility, but that's what you would expect of a value fund. Moving to the last two charts, we also wanted to give a quick overview of what is the sector exposure and what is the industry of exposure of this ETF relative to the S&P 500. And so we're not showing how much they actually own of each one of these sectors or industries. We're showing what is the difference. And so in this case, with consumer cyclical, that's the biggest overweight of this fund. This fund has more consumer cyclical stocks. The difference between its consumer cyclical exposure and the S&P 500's is the greatest of any sector. And it has the least, its underweight, its greatest underweight is technology. And so in this case, the difference between the S&P 500's weight in technology and this fund's is minus 24.8%. So this has a lot less technology than the S&P 500. And then on the industries, what we're doing is just highlighting some industries that this fund is chosen to overweight or underweight. So in the case of this fund, it has 10% more airlines than the S&P 500, and it has 8% less software and programming. And that's the type of thing you'd expect from a value fund. Obviously, tech stocks have been doing well, so you'd expect underweights in technology. You'd expect underweights in things like software and programming. And then the final chart in here is the comparable ETFs. And so what we've done is we've taken the factor profile of every single ETF in our database, and we've compared them to each other. And the ones that came out the closest in terms of value, quality, momentum, low volatility, size, all of those things are the ones that show up here. So if I look at QVAL and I want to find the most comparable ETFs from a factor profile perspective, these are the 6 highest that we have in our database. And they're sort of what you'd expect. You're seeing other type of value funds in here, and you're seeing value funds that use similar factors to what QVAL uses. And you can click on any one of these ticker symbols to get the report for that ETF, or you can click on the name and it will then automatically compare that fund to QVAL. So if I want to compare the shareholder yield ETF, I would click on the shareholder yield ETF, and now all the charts in the bottom turn into a comparison. And so this tells me QVAL's factor exposures relative to shareholder yields. So in this case, QVAL has more size exposure, meaning it has a little bit smaller cap stocks. It has similar value exposures, but again, that price to book thing stands out. And then also it has significantly more quality, and that's what QVAL's strategy seems to be doing, is trying to capture value with quality at the same time. So this is an easy way to compare any ETF to any other ETF and see what the differences are in what you're getting.
Thanks for watching this video on VALIDEA'S ETF Factor Report. We use QVAL as an example in the demonstration, but our ETF Factor Report is available on roughly 600 US equity ETFs. If you have any questions or feedback, please feel free to contact us at info@validea.com. Thanks again for watching.